welcome everybody to the Gold and Silver Club Commodity Markets Outlook for the 14th to the 18th of March 2016, presented by myself, Phil Carr, at the Gold and Silver Club. Today we'll be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. The live session will be covering an overview of the commodity markets. We'll be reviewing the top trades of the week, live market commentary, trading ideas for the week ahead, and of course we'll be answering any questions you have during the course of today's session as well. So before we get started, I'll introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, and as internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal, to name a few. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate a substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is just www.thegoldensilverclub.com. Okay, fantastic. So what we'll do, guys, we'll have a look at the price of gold at the moment. We'll move into our top trades and we'll also go over the charts and what we can really anticipate as we approach a new week. And we've also got the FOMC statement coming up on Wednesday as well. So gold is currently trading at 1,255 US dollars per ounce. So we'll take a look at that on the charts very shortly as well. The top trades of the week that we've had utilizing the Gold and Silver Club signature trading strategies have been as follows. So first of all, we had lovely follow through following on from our buy position and swing trade that we took on Brent crude oil, which broke out after non-farm payrolls on the 4th of March. We covered this on last week's session, the follow through trade that we continue to be in. So that broke out and profited us over 390 points to the upside on that swing trade. So a lovely breakout trade at the moment. We'll go through oil in more detail very shortly. We've also caught a lovely follow through on soybeans as well. You might recall we mentioned that soybean had come right off the lower end of a very supportive channel here, where it's been ricocheting between these levels throughout 2015 and 2016, and essentially we had a lovely rotation back to resistance. Nice swing trade again for 310 points profit on the trade. And also gold, the pennant formation finally did break out and we caught over 290 points on gold as we saw it break out again to 13-month highs. So essentially we've had some lovely trades over the last week and a half. And what we'll do, we'll move over to the charts and I'll talk you through what we can expect here as we head into a fresh week and a bit of a trading plan for this week as well. So the first market that we'll have a look at today, we'll start off with gold. As always, do keep the questions coming, guys. We can go over any questions during the course of today's session. Now, a few points to note on gold at the moment. So as we approach Wednesday, we do have the FOMC statement, which is coming up. In fact, let me just remove these Fibonacci levels for you. We've got the FOMC statement, which is coming up on Wednesday, and we're looking, the overall price structure right now is looking very interesting as we approach that statement. So ultimately, what we saw on Thursday was a breakout to new 13-month highs. We saw a good follow through on that, only on Friday to see quite a lot of profit taking into the close. And you'll see right now where gold is respecting an important trend channel. So we have a very important underlying trend channel right now for gold, which if it continues to respect that level, we would anticipate the potential to rotate higher. Essentially, if we were to break above last week's highs here, we would see more buy orders, particularly if we were to close above 1,285 US dollars per ounce. We'd be looking for a run up higher, up towards the 1300s, the next leg up here, and ultimately breaking above a significant swing high going back to February 2015. If we are to follow through here with more upside. If we do get a break in the close below 1,237 US dollars per ounce, we're going to break this trend line and we'll start the pullback at the moment. We haven't really had a significant correction on gold throughout this year so far. We've seen over a 23% move to the upside And gold currently, it is overdue a correction. The timing of that will be important, whether we will get that on the FOMC statement, after the FOMC statement, and whether we'll be able to just continue this rally to the upside. And we'll talk you through that a little bit more detail as we have a look through the other markets. Essentially, at the moment, if we look to where the major positions are in the markets at the moment, we've seen hedge funds and money managers increase the bullish positions in COMEX gold to the highest in 13 months. That was actually on the data which came through on Friday, obviously lifting gold there on Thursday during the overnight session, the Asia Pacific session. We saw 13-month highs broken to the upside. So that was very significant. We've also seen increase in bullish positions in COMEX gold to the highest months in 13 months, the highest level, sorry, in 13 months, again on the CFTC data on Friday. Now, some important points to note right now. Here's ECB President Mario Draghi. He rolled out various stimulus, including increased asset buying and a deeper cut to deposit rates, but signaled there would be no further rate cuts. So essentially, for those of you who trade other markets, whether that be Forex, equities, or commodities, you would have seen a very large whipsaw in the markets on Thursday. First of all, we saw a significant sell-off in markets such as the euro and gold initially. So you see this break to the downside where we saw Wednesday's low taken out. We saw a sell-off and then only to capitulate later on in the session where the ECB signaled there would be no further rate cuts. So this has caused a big whipsaw move in the market. If you go over and have a look at the euro, it was a 400-point candle which was produced last Thursday, creating a lot of volatility. And the reason I mention this is because there is now a lot of focus on Wednesday's FOMC statement. This will be really the next important market mover, and you do want to keep that firmly on your radar. It's going to be coming through at 7 o'clock London time on Wednesday this week. And really, we're looking at that to signal whether we are going to see another leg up higher here for gold or whether it is time for a correction. We're also following intermarket correlations at this point very closely as well. Now, if we move over and have a look at the silver market, and you can also see silver did pull back on Thursday and Friday, but only to so far today start to retrace back towards the weekly highs again. You'll see silver's currently sitting at $15.66 per ounce. So again, really waiting on a resolution on this on Wednesday. We've had quite a nice corrective bounce so far during the London session today to the upside. Ultimately, a few points to note here on silver. It is struggling a bit with this overhead resistance. You can note that we are forming currently lower swing highs at the moment. So each time we're getting a breakout to the upside, each of these highs is producing a lower high at the moment. We've got a pennant formation, which is where we're developing quite a lot of pressure into the pennant here. So we want to see whether silver is either going to be able to break out of resistance or if it is going to start to rotate lower in anticipation of the FOMC statement on Wednesday. So we'll be watching that very, very carefully as we head into Wednesday's FOMC statement. Right now, I would be neutral on silver. If we get a break and a close above resistance, it does offer another opportunity for a leg up and a breakout to the upside. However, if we break below support and we close below this supportive level, we can expect a rotation lower as we head into the FOMC statement on Wednesday. Now, if we move it over and we have a look also at platinum, platinum was quite interesting on the weekly close. We've closed with a rejection candle on the weekly. We've come right up to a key level resistance, and again you've got some quite important levels here for platinum where it's come right against a bit of a brick wall of resistance overhead. It has produced a rejection candle on the weekly chart. If you have a look on the daily chart, we've had 4 days of pullback so far from the highs here. You've got quite a nice clear trend channel which you can also draw on platinum. So if you just draw these overlying supportive channels and resistance channels at the moment, you will see where I'm expecting at the moment platinum to rotate lower back towards the lower end of its trend channel here, and then we'll be looking for a setup at that zone. If we do get supported at that level, we can look at buying the pullback. However, if it was to break and close below that level of support, we could then start to see a further rotation lower here and a larger corrective pullback. So we'll be monitoring both gold, silver and platinum very carefully over the next few days. Gold in particular historically has been the best mover on FOMC statements. If you go over and have a look at the higher time frames here, we're at a very critical area for gold here. So essentially, if you have a look on the monthly chart, you will see we've come right up to a very key level of resistance where if we are unable to follow through and break above this zone and close above it over the month of March, it does open up the door for a larger correction to the downside here. Now, there are a lot of buyers, a lot of strong hands in this market at the moment, but we may be just overdue a corrective move to the downside. So we really need to see how the FOMC statement plays out on Wednesday. I would just note, though, on the higher time frames here, we've definitely come into a very key level of resistance where if we don't follow through at this zone and continue higher, we are vulnerable here to a shakeout for gold. If you have a look on the weekly charts here as well, you will note that the next key resistance level is overhead, and this goes back to the swing highs going back to the beginning of January here. So if we can get a retest of those levels, a lot of traders will be targeting the 1300s to 1310 as the next profit target here. You can also just draw on those nice little trend channels that we've got at the moment on gold. If you just take it out to higher time frames, you'll be able to see those very clearly where we've got the potential here to rotate higher back towards key resistance. So it really is decision time this week for gold, and it's going to be an exciting week with the FOMC statement on Wednesday. Now, if we head over and have a look at the oil market, there's a few points that we need to note here on oil as we head into a fresh week. First of all, we did have some updates this morning, some breaking news that we've seen. Essentially, pullback below $40 per barrel this morning as Iran has dashed hopes for a quick deal on output. Iran said they would only join the output freeze group once they reach production of 4 million barrels per day. Okay, so Iran's oil exports are due to reach 2 million barrels per day by the end of March. So you'll see at the moment there is quite a disparity between the current levels of production and what they're targeting before they will agree to a freeze. And with this new information, this news which broke through this morning, we have definitely seen a pullback on oil just overnight and this morning as well. In fact, we were looking at the potential for a breakout on oil here to the upside, particularly on the back of the oil rig count which came out on Friday. So again, for those of you who follow the oil rig count, oil rigs fell for a 12th week in a row this week with the rig count down 6 to 386. That's the lowest level since December 2009. So that was significant. And we've also seen an increase in speculative positions, and also those from money managers and hedge funds have raised their bullish bets on US crude oil for a third week in a row. So that has been quite significant in the move that we've seen to the upside so far. If you take into account the lows that we put in January here, mid-January, up to the recent highs that we had last week, we've actually seen over a 50% move to the upside in oil so far this year, which has been huge. Now, at this point where we're at right now, we are expecting a bit of a pause in the market. Now, we do have the potential, if oil is able to rally back up here and re-attack this resistance level overhead, we've got a very strong neckline where we could really base and get a decent breakout to the upside. We'll be monitoring this very carefully, and we'll be monitoring this over the whole of this week to see whether we will get another breach of resistance, and if we do, it does offer trade opportunities. However, if we get a bit of a corrective pullback here, we'll be then looking at the next key levels of support. You've got an underlying trend channel, which is where actually oil is meeting the price right now. Brent crude oil is currently sitting at that trend channel at $39.31 per ounce. We're monitoring it very carefully. Again, oil is a very hot market this week. Gold, you definitely want to keep an eye on as well. So we'll be looking to see whether pullbacks get bought into on oil after the huge rally it's had so far this year. So if you have a look at where we're sat with the price structure right now, we've got a consolidation over the last 5 days. We're back at the supportive layer of that consolidation. If we get rejection candles around this layer, if we get supported, the next time we run up towards resistance, if we get a breakout of that level, it does offer a breakout opportunity, and there is quite a lot of clean air ahead here for oil to break out to the upside. Again, if you go over to the monthly chart, we've had good follow through on major supportive zones here, so sitting between 27, around the 27 US dollars per barrel is where we bounced off over the month of January, bounced off that level, and we've since rallied over $40 per barrel. On the monthly chart, you've got this basing formation. You've also got that very clearly on the daily chart. So for me, Brent is definitely a hot market to watch this week. Also, light sweet crude oil, very strongly correlated. We are also looking for a similar move. You will note that we've finally had a resolution on the head and shoulders pattern. We've been discussing this for a number of weeks. We did get a breakout of that neckline on payrolls this month at the beginning of March. We've had a decent breakout. That's followed through. We've essentially been able to take oil here up for a breakout over 3-month highs to the upside. And you can see very clearly where oil's just comes, light sweet crude oil has come right into resistance at $39 per barrel. And again, the next time we get a breach of that level, if we come up for a rally and break above that level, particularly if we close above that level, that will signal to us a potential buy opportunity here. Looks like we're getting a natural pullback this morning. Again, we've got underlying trend channels here which we want to see whether those will get supported as we head into the US session this afternoon. If they do get supported, if we get rejection candles at these levels, it does offer opportunities here for additional positions to be added, and we'll be monitoring that very carefully. So again, for me, gold and oil are definitely markets you want to have on your radar over the course of this week. Now, if we move over to the grains, our positions on the grains are moving very nicely indeed. We identified last week the potential for some swing trades off major trend channels here when we came down to key support on soybeans, on corn, and also wheat as well. So far our trade on corn is moving very nicely indeed. We took a breakout trade on this last week. We breached, we came down to a major support zone which held. We then breached key resistance last week. That's following through really nicely. Essentially the next major resistance zone we're looking at here for corn is going to be, you can see just going back to the swing highs here of January and February, we've got a lot of clean air where we could just come back up to test those resistance levels. I would anticipate once we get up to those levels that we'll pause in price there, potentially pull back a little bit before the next leg up here on corn, but ultimately our swing trade right now is moving very well on corn. Well done if you have caught some of this trade as it's continued to follow through over the last 3 days. Particular Thursday was a decent breakout to the upside, good follow through on Friday, and we've also gapped on the open as well on Mondays too. Now, if we go over to wheat and soybeans in particular, we caught this breakout trade right off the lower end of this support zone, and you can see how well soybeans has just been ricocheting between support and resistance. Again, we've had a nice pop to the upside, nice order in just at the 855 level where we've rotated off this level, back at resistance. We're pulling back right in that zone at the moment. So you can see here again where soybeans has come right into resistance. Traders are taking profit at this level, and we would like to see whether we'll either rotate back towards the lower end of our supportive zone. Again, our trailing stop losses have been moved on this trade. We've also taken some profits at this level as we've come right up to resistance here. What I'd like to see this week is whether soybeans will continue to follow through, whether it will break resistance and close above it, offering more upside potential here, or whether we'll rotate back down towards the lower end of its trend channel, or certainly just possibly a shallower pullback here in the week to come. See if we see just a pullback back towards the lower end of its trend channel as well. So we'll be watching also soybeans very carefully this week whilst we continue to hold on to our swing trades. And the other market I'd like to bring your attention to is going to be wheat. So we identified this last week that wheat had produced a major rejection candle on the higher time frames right when it broke through its 5-year lows here. We've had good follow through last week, closed with a very strong rejection candle. Again, you've got a nice V-shaped reversal pattern developing on the higher time frames. Again, the grains are very strongly correlated, so the move that we've had in soybeans and corn, I expect some potential follow through from wheat here as well. We continue with our soybean position and also our corn position, and just continuing to monitor wheat at this juncture. Now, if we go over to the softs, a couple of markets I want to put on your radar if you don't have them on your radar already. Number one is going to be coffee. You will see the pennant formation we identified last week has now broken out to the upside. We've had a significant move to the upside here on coffee. If we go out to the weekly chart, you will note the overall breakout that we've had so far is right. You've actually broken out of one major trend channel so far. There is one more trend channel which we really need to get a break and a close above at the moment, and you can see we're sitting right at resistance of this level. Now, getting into coffee at these levels, it is a bit overextended to the upside. However, we are interested in pullbacks now. So pullbacks on coffee, we'll be looking for buying opportunities, potentially number one of the next pullback opportunity, of the next pullbacks that we see here on coffee. We'll be looking for some confirmation, so rejection of previous resistance levels and looking to take on additional positions, or on the next run up to resistance, the next run up and breakout above our resistance channel after a shallow pullback here. We are looking to be buyers here on coffee, so we're keeping a very close eye on this. So again, have coffee on your radar. The overall price structure is looking very good here. In terms of the sell side, coffee is very overextended in terms of its much larger time frames. The overall sell-off that we've had is significant over the last 5 years. It's very overextended, and we're getting to a point really where we haven't had a decent breakout for the bulls in quite some time here. You can see the overall price structure over the last year. We've had a number of failed breakouts to the upside. If we do start to really build some momentum here, we're likely to get short covering, and we'll see more market participants here in coffee to potentially take this much further up to the upside. So absolutely have coffee on your radar. Another market which has moved significantly so far this year, which you might have missed, is sugar. Now sugar, in fact, off the lows this year has moved over 50% to the upside. So it's been a huge move here on sugar, and where sugar is sat right now, it's come right back up to a key resistance zone. Now I'm looking at 1529 to 1578 as the next major resistance layer here. Ultimately, I would like to see a rotation lower here for sugar in order to get back in on a better pullback at the moment. I do anticipate a natural correction after the huge move that we've had to the upside here on sugar, but again, I'll be looking at two ways on this trade. Number one, it has the potential to roll over and offer a short-term sell short opportunity, but then once we are overdone with a corrective pullback, we'll be looking to be buyers of sugar again and ultimately taking out resistance from November 2015. So definitely have these on your radar as well. They could be very lucrative trades over the course of 2016. So essentially, in summary, the key markets which I would suggest you definitely want to have a look at this week as we head into the FOMC statement. Now, the FOMC statement is going to be on Wednesday. It is a big, if you haven't seen the FOMC statement and how it impacts the commodities before, you definitely want to make sure that you make yourself available to watch that live as it develops, as the trading opportunities arise from that statement. In fact, before I go on and just give you a bit of a summary in terms of how you want to really plan the week ahead, let me just draw your attention to the Private Traders Club. So you can actually gain access to all of the setups that we will be providing live for the FOMC statement, the trade management revolving around those. You can get access to all of those being a member of the Private Traders Club. So essentially, as a member of the Private Traders Club, you get access to all of our live trade setups. So that includes our trade management, diversified with your portfolio every step of the way, from your trading stop losses to the exit, the entry point to take profit on your trades. You're helped every step of the way with the trade management of all of your trades. You get updated real time when we have a new trading opportunity. You get notified via email of those, you get alerts, and you're also able to log into our forum to get further details on every single setup, as well as ongoing trade management of all of our open positions. You get access to our live trading room. So throughout the week, we provide live trading rooms where we go over live market analysis. We talk about our open positions, how to manage those positions, how to make the most out of those trading opportunities. It gives you an opportunity to get all of your questions answered during those sessions. You get supported every step of the way. We provide you with a trading plan for the week ahead, and we go through the trade management of all of our trades in a lot more detail. So you get to join all of our live trading rooms throughout the week. We also provide you with a market week ahead trading plan every single weekend, which is a fantastic report which really outlines the major news announcements which are coming up, the major sentiment of the market, any key fundamental news announcements you need to be aware of, any key seasonality factors, and you also get updated all of our new positions that we're taking, portfolio, the management of your portfolio, the current open positions. All of that is included in the week ahead trading plan, which is made available to you every single weekend. And of course, you get supported every step of the way. So you've got someone there to support you, whether that's on the trading, the technical setups, on the live trading room, with your portfolio, any help with risk management, with setting up your charts. Every step of the way you are supported. So just to make an application to the Private Traders Club, all you need to do is just go across again to www.theprivatetradersclub.com, go to enroll here now, so you'll see ready to take your trading to the next level. Just click on enroll here now. Once you've completed the enrollment tab, once you've actually clicked on that, you'll be taken just through to the enrollment form. You just want to make sure you complete all the fields of that enrollment form. Once you do so, just click apply now, and a member of our team will get in touch with you ASAP on that. Okay, so once you've clicked enroll here now, a member of our team will get in touch with you and talk you through really the next steps. Okay, fantastic. So as I mentioned before, in terms of the week ahead here, what I would be keeping a very close eye on, again, FOMC statement is going to be on Wednesday. The hot markets to watch here are definitely oil as we approach the FOMC statement. We're just pulling back slightly this morning. We want to see if this pullback will be seen as a buying opportunity, whether we'll get traders coming back in to support the market on this pullback, or whether it will follow through further. Gold and silver actually, in fact, as well, is definitely going to be a market you want to watch very closely. If you have a look at the overall price structure on silver, we're coming up actually for a retest of the highs here from Friday last week. So if we were to break above these key swing highs from last week, we could really start to see momentum pick up to the upside. So I would definitely have silver and gold on your radar. They're major movers on the FOMC statement on Wednesday. We'll provide all of our traders with trade setups as we head into the FOMC statement and after the FOMC statement as well, which you can also gain access to. And on the agricultural side, as I mentioned earlier, we've got positions already running in soybeans, in corn. I would definitely keep an eye out on sugar and coffee as well. Finally, if you would like to just get in touch just directly, you can just call your closest office. Our UK office number is 0207 193 0403. Our USA office is +1 646 808 0403. Our Africa office is +27 11 083 8403, and our Asia office is 852 8191 0403. So if you are ready to take your trading to the next level, you can either call us directly or just go to an application at www.theprivatetradersclub.com.